Monday, May 19th, let's level up. Market had a bit of a down move early because of the debt downgrade, and bulls stepped in and bought it back up fairly quickly, which is pretty much what we had predicted. Bears weren't able to get the VIX over the 200 MA, currently 1978, 10 MA just above there at 2011, so if they can clear that, I think that they have a shot at a move still lower, but anything below there to me is just sideways to higher at this point. With regard to the ES and the NQ, we actually have a little bit of a channel formed here. In the ES, I just tweeted that out for super followers, so if you'd like to look at that, check it out. If we do get a pullback to channel low and it happens early in the morning, that would be 59.14s. I think anything over 59.2675 though keeps it kind of neutral. Below there does get a little bit more iffy, and I'd still feel better about still higher prices over 59.77 half. If that can clear, we likely make the run to 6,000. We stalled just shy of it today at 59.93 half. Qs, similar setup here. The chart's a little bit different, not as defined. But there, the bulls need to hold over 21,005, 29.75. Middle point, we're kind of right around there now in the after hours at 21,419 half. And I'd start getting a little more concerned if on dips they can't hold 21,167.75. That was VWAP from about 5 sessions ago, so if you take all of that out, it looks to me more problematic. But as long as the bulls can hold over there, I think it's all good in the hood. With regard to the SPY and the Qs, we were very clear on this. As long as the bulls can keep price over the 78.6s of the ranges, they're fine. 585.10 in the SPY, if they can hold that, I think the probability of retesting the 600 and maybe even into the 610s and 613.23 all-time high are high. If we lose the 585.10, I think there is a liquidation break, maybe even to as much as 563.02, which would be the 61.8 of the range. There are some levels in between there, the 200 MA being prominent at 574.64 and rising. There's also the 5.9 gap fill at 564.34, so I think that 569.34 to 563.02 would be a good downside target. So if you're doing a call spread, that's a good area to target with a lower strike. Maybe do something like 575, 565, 545, or 555. Qs are similar. Bulls need to hold the 511, 19, 78.6. If that fails, we could come down to the 5.9 gap fill and 61.8 confluence at 487.93. On the upside, I think that we're bumping up near the old channel high at 527, so it doesn't surprise me to see some resistance, and then between 536.88 and 540.81 all-time highs are likely in play as long as things stay benign. Generally, though, for a rule of thumb, I think you can use the Monday range. Anything inside it is more neutral to bullish. Anything above it is bullish, anything below it does get a little more bearish. Apple's had some struggles with some downgrades, but we've talked about there being consolidation ranges both above and below price. Today we tested into the lower part of that. Anything below 203.93 gets increasingly more bearish. Inside of 203.93 to 208.42 is a little cautionary, but above is okay, and we closed just shyly above there. If we stay above 208.42, we should retest the 214.66 to 219.38 upper band, and if that resists, then we're back into the chop. If it can clear, we likely will fill in the gap 4.2 up to 223.89, and then that to me would be a good upside target. If you're using a call spread, that's a good upper strike. NVIDIA consolidating here. Next big upside target would be the 78.6, a little bit weaker there than the Qs, so stay cautious. 138.90 and then 143.44 of the big upside targets. I think you can use today's low of day of 132.39 or VWAP at 134.76 as a stop. Anything above is bullish, anything below does get a little bit more bearish, with liquidation break potential to 127.72 and maybe even all the way down to the 122.47 100-day moving average, which is a very key pass don't pass line. Remember, in the past when we traded below the 100 MA and back up above it, it was bullish, and then it kind of flipped one cycle where we traded above it and below it and became bearish. Right now, as long as we're above, it's bullish. Below does get increasingly more bearish though. Amazon had a nice little dip today. I was looking for this rollback after hitting the 61.8. We hit the 50% fib at 201.95. We actually undercut it a little bit, but anything over 206.21 to me is okay. I'd feel better if we can clear the 100 MA at 207.44, and then of course the 61.8 at 211.52 for the move up to the 219.97, which is my end range target. If we do keep slipping, the 5.9 gap fill is 193.06. Any moves down though there, I would be looking to buy the dip because I do think that there could be a run into prime day, maybe an overshoot to the 190.59, basically the 50 MA. Google quietly recovered after having that big dump on the Eddie Q news on 5.7. It is consolidating around the 38.2 though at 165.94. I ultimately do think this could see the 173.75 and maybe even up into the 181s, but it is sort of night putting here, and bulls will need to defend 50 and 20 MAs on pullbacks, both currently in the 159s. Tesla hit the 50% fib, pulling back, no surprise there. Dips now will need to hold the 319.03 to 325.10 level. If it can't, then I think they're coming back down to the 291-ish area. On the upside, if we clear the 250.139, the next resistance zone is 373.04 up to 383.76. Gold bounced off the 50 MA like we expected, a little more continuation today, although you'd think with the debt downgrade it might have been more impressive. The 20 MA is up at 303.39 and falling. That likely will be some resistance now. If they take out the 50 MA at 291.96, I think the move to the 2 times range at 281.68 is back on the table. The Bitcoin, bullish into my next resistance zone here, 106.945. Careful if that can't clear. If it doesn't, we could pull back to the 102.554. On the upside, the next levels are 108.960 up to the 110,150. I would not be surprised to see Bitcoin make some new highs here. We have been bullish. TLT is very key here. Again, we banged against the range low into those 84s and 85s and held. If that keeps getting hit, though, eventually there could be a trap door opening up to the 82.42 area, but I do think we're going to chop around in range here. Generally, as long as the 10-year is below the 4.5%, it's okay. If it clears, we're probably going to test closer to the 4.65 to 4.75. I think that there could be an opportunity here for a bounce in TLT. Everyone on TV seems to hate it. We did get our bounce that we were looking for, and we talked about that on 429, looking to exit if we lost 89.55. And then I think that there is going to be an opportunity maybe with the trade deals coming through, or maybe an end of the war with Ukraine. That could prove to be an opportunity because I do think that that will all be very deflationary. Generally speaking, the markets have run quite a bit. Sentiment has rebounded quite a bit. I think that there's good opportunities now into pops to trim some gains. We talked about that even today on the trade with Jeppy. UNH seems to be rebounding. Maybe there's a little bit of love there. That could help buoy the markets. That's been a huge drag. I ultimately do think that that could fill the gap to the 378.75. By the way, that was fueled by a lot of insider buying. The old CEO, who's now the new CEO, bought a bunch of raft of stock, covered shorts, and bought the dips around the 249 that we had talked about. I'd be trimming at 323.95. Careful, you don't want to get too greedy and assume end ranges, but I do ultimately think dips now and UNH probably get bought, at least until their earnings, which everyone seems to think is going to get kitchen sinks. But if you have all this insider buying, why would they kitchen sink the quarter? Like and follow for more.